In Friday's session, inside the stock market, we saw Nvidia and Tesla doing really well. It was pretty much green right across the board. Looking into the crypto market right now, we can see Bitcoin is slightly down, Ethereum is down, and Doge is down. ADA is just eking out a moderate gain. Do we expect the stock market rally to continue? Or is Bitcoin giving us some kind of insight that a retracement might be underway or on the way? We'll run the numbers together and find out. And let's run the numbers. Hi everyone, I am Ken from CryptoTradingKS and the CTKS method. One thing that we look for when we look at Bitcoin is a really good risk on or risk off indicator inside the stock market. This relationship is not generally picked up by people only inside the stock market, but it's a pretty good indicator. We've seen recently that MicroStrategy went absolutely nuts as Bitcoin repaired. This begs the question, how is Bitcoin actually performing? So far, we've seen negative price momentum as like we saw in the 2016 and also the 2020 cycle. But it's starting to turn around as it did in the 2016 cycle and also in the 2020 cycle. So far so good. We've seen an area of positive momentum start to enter into crypto, and that's really good for the stock market. When checking the capitulation indicator, we're not seeing any signs of capitulation at the current time, but we do want this particular red line to start moving back. That would instigate a big up move in crypto, and that's what we want because it will filter into every single risk-on asset class. The US economy is very strong at the current time, and that's causing the dollar, the DXY, to go up and appreciate. It's also pushing the yields up. This week, there's an absolute barrage of economic data coming out. We get the final services PMI, CPI, ISM Services PMI, JOLTS job opening. The ADP non-farm employment change is going to be a big one. Unemployment claims is also coming out. And later in the week, we get the FOMC meeting minutes. This is going to be a really choppy week. The US economy is showing enormous strength, and this is putting a lot of pressure on those interest rate cuts. A lot of people expected that there were going to be massive interest rate cuts. There's likely to be less than 2 FOMC meeting minute cuts at the current time. And if strong economic data comes out, guess what? There could be 1 or even none. The market is not expecting this. You'll need to know your structural levels. Bitcoin operates 24 hours a day, 7 days a week. It never sleeps. It's always open, unlike that lazy stock market. This makes it an incredible risk-on indicator. Now, when you look at Bitcoin like this, what do you see? Realistically, not much. Of course, Bitcoin is going up, but where is the resistance? Where is the structural resistance? Where is the structural support? By applying level 1 and level 2 standard certification, you can see it visually. Now, what we're going to do is to just pop on the indicator from the service. So all of that level 1 and level 2 has been done for you. What we can see right now inside Bitcoin's price action, and just putting labels on that price action for you to make it a little bit easier, the 98,384 is a key level of structural resistance. We need to get above this level to go up higher. And what happens if we don't go past this level? What if this level fails? This creates negative structural attraction to the 96,844 level. To better understand if things are bullish or bearish inside the markets, we need to do the cheat sheet, because the cheat sheet reveals through structural analysis the direction and momentum of the market. If we manage to get across that 98,384 level, the next structural resistance is at 99,798. If we fail at the 98,384 level, there's 2 levels of structural support below, so that's good news. Another thing to remember, all charts are intercorrelated and interconnected. I want you to keep your eye on this point here and this point here as we pop across to look at total crypto market cap. Now, when we look at total crypto market cap, we can see those same 2 points, here and here. Now, what does it mean? When we throw the indicator on, we see structural resistance there and structural support playing through these levels. Let's go back to Bitcoin and understand things a little bit better. When we come back, we understand that Bitcoin was getting through this level of structural resistance, but it ran into total crypto market cap structural resistance as well, and that pushed it down. Then, what was this area? That was structural support on total crypto market cap. You can see that you can't just look at your chart to determine where your chart is going. You need to understand intercorrelation and interconnection, and this is what professionals do. Retail, it's a mystery to them, but we are a professional channel. My goal is to help you to become an institution of one. And becoming an institution of one, you can look across a lot of different data sorts and see what's actually cooking inside the engine. Often, retail just looks at a headline and ignores data. Professionals ignore headlines and just look at data. You can pick up my watch list in the link in the description of this video. And when we look throughout the different rows, we can see the VIX came down in the past trading session. That's what pushed everything up. Unfortunately, the yields came up, and this put pressure on both gold and silver. One of the things that we're noticing right at the current time, we saw that MicroStrategy did really well, as did Tesla. When Bitcoin shines, they tend to go with it, so that's something that you want to keep in mind. Total crypto market cap is pretty flat to negative at the current time. The positive figure on USDT dominance is showing that people are just cashing out the cryptos and putting their money into stablecoins, and we can see all the different total measures are going down currently. Litecoin is shining in the dark. It does tend to become quite light from time to time, and ADA's also doing well. What we want to keep our eye on in the current period, and especially across the week, is the row 1 references. If the VIX futures start to spike up, that's going to put a lot of pressure on the market indices, and everything is going to retrace, including Bitcoin. Just remember, if we look back to what the VIX did, it came down 10%. That meant a blanket of green for the stock market. And all of that activity was led first by Bitcoin. Understanding intercorrelation and interconnection is literally like putting money into your pockets. The market is not some kind of hostile thing. The market is simply a pooling device for money. And when the money gets pulled, if you know what you're doing, you get paid. And if you don't, you pay the market. It's that simple. One thing to be aware of, the S&P 500 is still under structural resistance. It's still in a downtrend. And this means that we have to understand that volatility could come into the market. We could see an upsurge to just test this previous resistance line. It's very short term, but it's what a lot of people will be looking for and looking at. If we get above that line, that's a really good thing. But understand we are in a downtrend at the current time. Expect volatility. If you do it correctly, volatility is your friend because you can make a lot going long at spot if you know what you're doing. And the key is you must know what you're doing. Just zooming in to recent price action on the S&P 500, you can see that we've come up to this particular level. Now, what is that level of structure that's playing out through here right now? We can see the 59.42 level is a level of structure. And we've spent quite a bit of time here. Now, if we start to lose that momentum, the next logical place is around that 59.20 level. And if we fail to hold that, the 58.84 level approximately is the one to look at. If we manage to get across this particular 59.42, the next level of structural overhead resistance is at 59.60. Professionals look at the depth of the market like this, or the detail. They need to know where the gaps are before they occur. A lot of people will talk about a gap after it occurs. That means pretty much nothing. You've missed the boat, you've missed the train. But what about if you knew where the gap was before it occurred? We do. What's the most likely scenario? well, potentially the bulls have to rest just a little bit, so a push back to the 59.20 mark could be on the cards, and then a surge through these levels. If the bears gain control, we'll pass through that 59.20 pretty quickly, and we'll test the 58.84 level. You must keep your eyes on structural levels, especially this week. And if we manage to rally up, well, that is absolutely positive news. Where we are right now is a level that you need to keep your eye on. The stock market is so damn lazy, it just closes and opens for hours. It's just like banks. My God, what are they going to do about it? Thank God for crypto. What you need to do is to keep your eyes on the futures of the major market indices. And you can see a current retracement at the current time, and Bitcoin is following. Bitcoin is that blue line. There is a lot of interdependence and intercorrelation between the crypto market and the stock market, especially the US market. If people say they're disconnected, just give them a flick because they don't understand institutional thinking. You don't want stories, you want the data. You actually want to look at what the correlations and interconnections are doing. If the futures of the major indices start to pull back, you would expect the S&P 500 and the major market indices to open lower. And it depends where it goes in the next 24 hours. If it goes down, that's giving you a really good insight into what the main markets are going to do and how other markets are going to get hit all around the world. So make sure that you keep your eyes on that. Bitcoin is the easiest way to understand where the markets are going. It is literally a crystal ball on the future. And if we see things starting to turn around and starting to go up, that is fantastic as well. Retail will only buy when the price of whatever they want gets very expensive. Professionals will only buy when the price is cheap. Therefore, getting a retracement is not a bad thing. It's an actual bargain if you know how to read across the markets. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And if you just go across to CTKSmethod.org and scroll down, you can get the free cheat sheet right here. It is invaluable. Have a great day or night ahead, my friends, and look forward to catching up with you again in the next video. Bye for now.